You might want to click on the thing at the bottom that says if you're happy with it. Yeah. Good morning, everyone. John Ng here from Money Jar Concept. I've got a very, very interesting interviewee today. I've got Belinda Botzolis from Heron Todd White. Now, she is a valuer all the way out from Sydney. So she's not from Victoria. So she's doing some stuff that we Victorians can't do, like without any with not much more of a restrictions. But moving on from that depressing topic, hello, Belinda, and tell us a little bit more about yourself, and hi.
Hi, and good morning. Yes, I'm a property valuer. I think this is coming onto my 15, maybe 16 years. So I've been doing it for a while. I'm also a registered tax agent. So that means that I can do tax depreciation schedules for investors. And
nationwide?
that, Yeah. So with the company I work for, we have offices around the country. An inspector will do the inspection for a depreciation report for me. They'll gather all the data, they'll measure up, do what they have to. They send the information to me and I can do the report remotely. A valuation is a little bit different, because with a depreciation schedule, it's all based on historical costs, but an evaluation is my own personal opinion. So I have to inspect it to then generate my opinion on it. So besides outside of work, I'm a mum. I've got 2 young kids, a 5-year-old, and he's starting school next year. And we had the principal's interview, and, it's just my boys growing up. So, that's life. And my daughter's 3.
Life.
Yeah, he'll be in year 1 and then she'll come straight into kindy. So they're a year and a half apart, but they'll be a year apart at school. So
a mom talking to a dad. I get you completely.
yes.
Let's talk about something else. Today is also a very special day for you. We spy a little pink balloon, kind of matching my top here. It's someone's birthday today. Don't tell us how old you are, but happy birthday.
Yeah, it's my birthday. I was woken up by my son running to my bed. Mom, I want my iPad. And I thought, I thought he'd remember, but he's 5. And then my daughter, the 3-year-old, she runs out. She's like, Mommy, happy birthday. So I got 1 out of 2. So that was nice. So yeah, it's for the kids.
It is. But they've done well. And before we get into the hard-hitting questions, I also want to bring up a little less known fact about you. Apparently you're a TikTok celebrity. So you've got a video that's about 1.5 million views and about 86,000 likes. So tell us, what was that? What's all this fuss about?
I don't know what happened.
What was the video about?
It was about negative gearing. How trivial, So I did a video, and I think I'm not going to call it my success on TikTok or whatever. I think a lot of people resonate with my videos is because I try to make them really basic, and I try to make them in a way that I would like somebody to explain things to me, like a mechanic talking about a car, while those extractors and spark plugs, I'm like, dude, just what's wrong with it? Tell me.
That's right.
It doesn't work.
It
needs oil, it needs petrol, it needs a new battery. That I understand. So I sort of take that that concept and I apply it to my videos, and I try and make them as simple as possible. And that video that got 1.5, I literally had a piece of paper, a stick figure, a drawing of a house, just like a child would draw. And, and I had a very sing-song voice, like the way you would read to a child.
Correct.
Hi, I'm Charlie. I've got, I earn this much money, and I've got negative gear, and I have investment property. And I think it resonated with a lot of people, because most of the comments were, my husband's tried to explain that to me for the last 15 years. I never understood. But
now I do.
I read the Financial Review every morning, and I never really grasped it the way you've explained it in 60 seconds on a TikTok video. So thank you. And I'm like, my job here is done. So
what I'll do as well, for those who are curious about this video, I'll post a link below. I'm personally not on TikTok. So for those who are on TikTok, if I put the link in the comments below, just check it out. Feel free to add to the 86,000 likes that she already has. So, all right, let's get to the hard-hitting questions. Okay, I've got a series of questions lined up here. and just say it as it is. And then because I think a lot of people out there are very curious about what a valuer does. All right, question 1. Do you work for a bank?
Indirectly. We a valuer is not just a bank valuer, we are a property valuer. So we will attribute a market valuation on a property, but we do all sorts of valuations, stamp duty, family law, compulsory acquisition. So all sorts of, it's a broad, profession. Now, if we do a bank valuation, we have a contract with the bank, which means that they've employed us as a professional to give them advice on whether or not that property has any adverse, characteristics. So we don't just look at the value, what we think it's worth. We also look at it and then we have a risk rating. And I'm sure you've seen a couple of valuation reports. We have sort of 1 to 4, and that's a scale.
5. Yep.
Yeah, you don't want to see the 4 and 5, so stay away from them. But and I guess what we see is our duty of care as a professional is extended to the bank because they're our client. They've asked for the report, so they are our client. So in that sense, yes, we do work for them.
Not the consumers whose homes are getting valued.
No, that's correct. So, and we get a lot of people at the inspection say, okay, what's my house worth? Can I have a copy of the report? No. Yeah, no, our contract is directly with the bank. The bank is our client, even though it's your home. So the bank say to us, don't tell the client just yet, because we've got to do our internal risk assessment and analysis on the report. And depending on, what the report reads, then we lend accordingly. And also depends on the individual client circumstances, their pay, their spend, what they spend. So that all gets in the mix. Because our client is the bank, we don't get any information from the owner or the person who owns the property. So we don't know what you're borrowing. We don't know how much money you're taking out. We don't know where you work, nothing. So if you want a copy of the report, you can ask your bank because they might. But if you want the valuer to give you the report, you'd have to employ us directly and have to pay for the report again.
I can also speak for the valuers and banks out there as a broker. 99% of the time, it is not going to happen. It's no way we will give you the whole 7 or 8 page report. All right.
And one of the reasons they don't too is they don't like the owner to shop that valuation around to other banks, so because that's theirs, they own it, their name's on it.
And it costs money. Like $49 or $99, depending on which lender you go with.
Yeah.
All right, second one. Okay, this is a good one. Are you considered essential? Are you still able to inspect homes during lockdown for valuation? Let's just say a consumer wants to refinance their home to say XYZ Bank. XYZ Bank naturally wants to valuation of the property. They engage Belinda. Are you able to go there and do a valuation?
Yeah. So you got essential workers, and then you have critical workers. In New South Wales, it might be different in Victoria where you are, but if you're classified as a critical worker, then you can basically be exempt to travel freely outside your LGA, outside your 5 kilometres, without, what are you doing here? We are seen as a critical worker to the finance industry. That is because if a bank is lending money on a purchase or on a refinance, they need to make sure that the valuer is satisfied of that valuation figure. And we are then, because our name is on that report at the end of the day, so we got to make sure that we're confident that the bank can lend on that property, knowing that a professional's gone through and assessed it. Again, not just for for a market value, but are there any risks? and just quickly for a risk, it might be, are you located in a school drop-off zone? That might seem like a really weird one.
I didn't know about that one. That's new to me.
Yeah, I
Wow.
tell you why, because some people, they might not want to be living in front of a school. They might say, oh, just the school drop off and pick up, it's noisy. I hear the bell ringing, the kids hang out the front of my house, they sit on my fence, they wait for their parents. I'm not interested. So you're limiting your market demand, and the bank want to know that if that house went on the market, is there any, adverse characteristics that we should know about? And one of them, believe it or not, is a school drop-off zone. So things that you may say, oh, but the house down the road sold for $2 million. Yeah, but it wasn't in front of a school drop-off zone, or it wasn't 3 houses down from the highway, or, it wasn't under a flight path.
I've learned something new today.
Yeah, so, and there's a whole bunch of other things we look at too that you may not care if you buy that property, but a valuer will assess it to the bank, and the bank may not change their lending ratio whatsoever, but it's there for them if they want to assess that risk. So.
Wow. All right, that's a lot of interesting nuggets of information there. Let's move on to question 3. Now, I get this all the time, and I'm sure you get this all the time. When the valuation comes back, it is $300,000 lower than what they had thought. Why is my valuation so low, John? What the hell? What's the valuer doing? What's the bank doing? So how, tell us what goes on. What's behind? Tell us the behind the scenes stuff here.
It is very. Yeah, it's very frustrating for owners when they get that valuation bank and they say, oh, it should be worth $300,000 more. And it can be sometimes, and I get this a lot, now that I'm not saying I'm famous, but now that I'm on TikTok, I get a lot of, but my bank, my broker ordered 3 different valuations, and 3 different valuations were different. And, one lender, knocked back my application because the valuation came too low. So we just changed lenders and we got what we wanted. The thing that's hard is each valuer will assess their comparable sales slightly differently. So we base our assessment on your home on, say, 3 to 5 recent sales. And this is where it gets a bit tricky, and it comes to the expertise of the valuer. So, I mean, I'll ask you, in your area where you live, I'm sure you've seen some sales evidence of homes that have been really high, right? And you thought, wow, did that house get that price? That's crazy. Then on the other end, you might see another house and think, well, that was pretty good buying. That was cheap. I'd pay that for that house. I might even pay more. That went for too cheap. So then you have this 2 ends of the scale where you have some homes that are at the top end of the market and some at the bottom end, but they're relatively similar homes. So one valuer could assess it, take each sale as a comparison and assess it to your home differently. And that's where you get a bit of I guess, an inconsistency, because my opinion is that top end sale is above market. It probably shouldn't have got that. It was a really hot auction. There was a lot of back and forth between 2 buyers. I think it probably should have stopped $200,000, but they were going at it. It might have inflated that market. But another valuer may see that, because it's everyone's personal opinion, and another valuer might see that and say, no, I thought that was okay, bit high, but okay. So it can come down to the individual valuer's assessment of that sale. And also, if there is an adverse effect on your property, some values may put more weight on that than others in terms of adjusting it for the market. So if you had a really old home, some values might see that as purely land value because it should be knocked down, for a knockdown rebuild. And others might see that as it's just a charming old cottage in a really high-end established neighborhood. So yeah, it's tricky. Yeah, it's hard, and I guess it is a little bit of a stain on our industry that they say, well, you're the expert, and all the valuers should have the exact same figure.
Yeah.
Yes and no. We should, but it comes down to our personal assessment and what we understand that market and those sales. So yeah.
Tell us about the, you mentioned comparative sales. So, I mean, especially where we are in Sydney and Melbourne, comparative sales don't really matter. Even two properties that sold 2 months ago, you find that properties that sold 2 weeks ago are marginally higher because they seem to be creeping up like 10 or 20 grand every week. So it's using comparative sales, are they even relevant anymore if you're using a report from say 3 months ago?
Well, that's what we need to assess to the bank, you see, because when they're lending money, and this is really hard in a rising market, because I get what you're saying. You're saying that, well, if you're using dated sales from 3 months ago.
It's not dated to me. I think 3 months is actually fairly accurate.
Yeah. So, but the market could have moved within 3 months. We do take it into consideration. We do adjust, same as a downward market, because, sales in a downward market, sales 3 months ago are much higher than now. So you have to adjust for a sliding market. It's, I like it when the market's plateaued. That's really good. And I can go far back and use some comparable sales there. But I guess this comes back to the expertise and understanding, because we don't just look at what the market is doing today. It's a, how do I say it, like a holistic approach to valuation. We sort of see where are interest rates at, where are consumer confidence at, what's the unemployment rate at. We get a general idea of what the economy is doing. How could this factor into what the market's doing at this very moment? Are we starting, is inflation creeping up? All these things we assess, and we sort of, it's a snapshot at that day. Tomorrow there might be an apocalypse, but today everything's okay. It's good.
Yeah.
A happy day, the sun's out. So what's the market doing today, and how do we assess that property given the sales evidence and given just the general, I guess, nature of the market, not just what's happening in your state, in your sort of your micro council government area, but also in the country as well.
Lovely.
So yeah, it's a bit tricky, because when the pandemic hit, we all thought it was going to be the beginning of the end, and now it's not.
Thought, it's not.
That's why it's important to really assess as at the date. You can put clauses in saying, well, it's good now, it may change, lend with caution, that's fine, but we can never say for certain that something's going to happen. Yeah.
Next question. So tell us the different types of valuation. We've got, automatic AVMs, short forms, long forms. I mean, for the Joe Blows and Jen Blogs out there who are not familiar with these types of valuation terms, so tell us, just break it down very briefly what they are.
So we'll start right at the bottom end, I guess. So you could have what's called a desktop valuation. That means that a valuer physically does not leave their desk. They have a whole bunch of information about your property from the bank. They look at like a Google map, street view, aerial, cadastral maps, all that stuff. We don't give an actual valuation figure. We give a range, because we physically haven't been in, so we don't know for certain. So we'll give a range. And then the next step up from that is a curbside. And a curbside is we physically go out, we drive past the property, we get a feel for the location. Is there a big water tower or power lines in the backyard that we couldn't quite get, from a desktop? Now, you would only get a desktop or a curbside if your loan to value ratio or what you're borrowing is fairly low. So if you've got a $2 million property and you only want to borrow $500,000, they'll consider that very, very low risk, and they'll say, and it saves you money, because these reports are much cheaper than a full internal inspection. And the bank just want to know roughly what your home's worth. They'll order one of these reports. Then we have what is just called a property pro, and that is just your typical bank valuation that you'll come in. The valuer will come in and do an assessment. They'll measure up, they'll take a bunch of photos. It's funny because people say, you spend 10 minutes, 15 minutes in my home, how do you know what it's worth? We see that many properties every day, and we know within 5 minutes if it's a good floor plan, if it's a good quality home, if it's something that's going to be, a high value home. The rest is just us taking in blinds, light fittings, I always say this, it's like a duck above water. They're cool, they're calm, they're looking around, they're tapping.
They're doing
but
this underneath, yeah.
The brain is processing, processing.
Yeah.
So yeah, you do think, well, 15 minutes, you can't. How do you know? When you're a home buyer, you're looking at it from an emotional part. So your inspection may take half an hour, You're sitting there thinking, where would I put my couch? Is this a good home for me?
You're not thinking that. Yeah.
No. Yeah. So and then that would be the property pro would just be a normal valuation. The only time we'd order a long form, what you call a long form, and that is a much more comprehensive. Now, the method and the analytical part of it is exactly the same. It's just to the bank, if you can say it in 5 words in a property pro in a short form report, they want you to say it in 3 paragraphs.
Yeah.
So they want a much more comprehensive report. They want to know a lot more information about the home. They want you to expand on those risk ratings instead of just having 4, 3, 2. Why is it 4? Give me a whole page about why it's a 4 as a risk rating.
I've seen a couple
and that's
of those.
Usually homes over $2 million, $3 million, because what they're lending and the loan to value ratio tends to be a lot tighter, and they want to make sure that if they lend that money, that they're confident that that property is a good,
it's a good security there to hold on to. Yeah,
correct.
Worth that amount. Yeah.
Yes. Yeah. And then outside of that, this is residential. Then you've got commercial, industrial, rural properties. They have different methodology, if you will, for how they come up with their figure, because they take into consideration rentals. Where residential property, it's valued on a vacant basis, assuming you're going to live in it.
Correct. Now we got 2 last questions there. Second last one. What exactly do you look for when you're in the house? What do you look for in the valuation? Would it matter if the property is tidied up and all the linen is folded, the cookies are in the oven, the air freshener is in the air, I don't know, there's some sexy chill out music in the background? Would it even help to get an extra 100 grand by doing that with the warm mood lights? I've never tried any of this. I've been to many, yeah.
I was going to say, it sounds like you've been to quite a few open homes.
I have been, yeah. Would it help?
Okay. No. For a valuer, no. Yeah. But for a sale, if you're selling your property, do not listen to anything I'm saying, and style your home, dress it, bake the cookies, put the candles, because you're advertising your home. It is a marketing strategy. For a valuer, we are trained. The first thing we're trained at university is in our lecture for Valuation 101. The property is vacant. You're valuing it on vacant possession, free of any furniture and any fixtures and fittings that aren't permanent to the home. So I walk in and I straight away, I guess, strip the home of furniture. Anything that's in there. So you could have a beautiful home that's maybe got tenants in there that, just have very basic furniture. We look straight past that. What kind of quality kitchen is in there? What condition are the floors in, the walls, the ceilings, the windows? What are the views? Because, what's the location like? Because when that home is sold, no one buys the furniture. So we are trained as professionals to look past all that. I mean, it does help if I don't have to step over your dirty laundry in your bedroom to get to the ensuite.
Yeah.
I respect that.
Yeah.
If there are people not sleeping and I have to crawl around. Here's a tip, and this will help. Open all your blinds. Let in all the natural light. Turn on all your lights. Let the valuer see your home in the best light. If you want to spend 3 days cleaning it, cutting your grass, a general tidy up, I guess, is encouraged. Yeah, encouraged. So then we are best to see your best features of the home. If there is anything that sometimes you can have an ensuite that's through the walk-in robe, and then, you didn't realize it was there. Highlight these features to the valuer in case they miss them. So you say, you saw the ensuite. Yeah, you saw the ensuite in the built-in, didn't you? You opened up the built-in, and you might be like, no, actually, I didn't. Or you'll say, oh, did you see that secret cellar we have? You have to open up the latch in the, I didn't see that. Thank you for pointing that out. There's a panic room. There's an attic room. There's all sorts of rooms. Yeah, so just highlight them to the value. Is there solar panels on the wall? I mean, on the roof. I don't know.
Yeah.
So it's the Jetsons house. They have all sorts of stuff. So if there's any features that you want to highlight to the valuer, by all means, we have some homeowners that follow us like a puppy dog, just around the whole house, just that look, did you notice that? I'm like, yes, I saw it.
I wouldn't like that. Yeah.
Yeah. Others are just
awkward. Yeah.
That's fine. I mean, it's your home, by all means, please show me. But yeah, that's probably what I encourage the most is don't bother making it a display home and don't panic. But yeah, if you're going to sell it,
tips.
Yeah, if you're going to sell it, I recommend hiring the furniture and making it really careful. And if you've got a minute, I'll give you another really good tip. If you're buying a property and it's furnished beautifully by one of those hire companies, remember my words, picture it without the furniture, because a lot of people get, isn't this a lovely home? Oh, what a beautiful bed. I love those cushions. Like, no, don't
be there anymore. Cushions. Yeah.
They're not there when you buy the property. Yep. Look at the bedroom size. Is there a built-in? Is there a ceiling fan? Is there air conditioning in the home? What's the condition of the kitchen? Are they good quality appliances, instead of, oh, isn't that a nice vase? Or, oh, I love those flowers in the kitchen. They're nice display flowers. So they're all there to distract you and make you feel like it's a beautiful home, but they're not there to make you see the house for what it is. So
good tip.
No furniture. Close your eyes to the furniture and just look at the house.
Last question. And we'll leave you on your merry way. How many jobs do you, pre-lockdown, how many jobs do you normally book a day? Because normally, if you work for Heron Todd White, and you obviously, a lot of lenders are Heron Todd White's clients. How many jobs do you book a day across all the lenders and banks?
So this is talking as a mortgage valuer doing what I described as a property pro, just that real standard 5-page report, maybe throw in a curbside or a desktop in the mix every now and then. We also do quite a bit of progress inspection. So a lot of people that are building and they need us to do
stage 1, stage 2.
Stage correct. Yeah. So you throw all these in the mix, and those progress inspections, they're very quick. They're just us going out, concrete's there, tick, quickly do the report, send out, because there's no sales analysis, there's no risk analysis. It's purely just identifying that progress inspection is complete, send the funds. So understanding all that, I'll get to my point, it can take 5 to 6 a day. Now that seems like, how can you assess that many properties? If you've got a valuer doing 5 or 6 a day in that small, tight pocket.
Your report just takes a while.
Yeah, but you get to know your sales like the back of your hand. You're driving and you could be doing 4 or 5 inspections within 3 or 4 streets of each other within that week, because your pocket is so tight. And we're doing all the big banks. We're doing some of the smaller lenders. So we're getting work in from all the banks, and that means that we've got a really tight run, and that valuer then becomes an expert of that, the southeast part, the northern part, the western suburbs. They know those, and then you've not just got the western suburbs, you might have the northwest, and there's a valuer for that area, and they know that area. They can talk to you all day about the sales. Oh, I inspected that, because they do it for the bank, for the contract. And then And just be careful too, because if you're shopping around and saying, oh, I don't like that valuation, and you order it through another broker, you could get the same valuer, because it's a little like Russian roulette. You're familiar with, do you guys use Valex? You guys use Valex, don't you, down in Victoria? Yeah, so Valex is the system that is between the bank and the valuer. The bank put in a request for evaluation to Valex, that's the company that then spits out the instruction to the valuer at random.
Yeah, you can't pick it. You cannot pick it. Yeah.
Yeah, it's a good chance that it can come to us and we'll give you the exact same figure. So then you've just
I was here yesterday. Yeah.
Yeah, and we don't actually go out for a second time. So yeah,
nothing's changed within 24 hours. So
no, but I forgot to mention earlier, and sorry, because I do babble a lot. But with the valuations, sometimes at the moment now between New South Wales and Victoria, which would probably a lot of your viewers maybe right now, when we do an inspection during these times, we can do what's called a contactless inspection, where the owner, and that's completely fine and encouraged, that if you don't feel confident or comfortable with having a valuer come through your home, you can nominate to. Yeah. So if you are watching and the bank is asking you to send photos to the valuer, I'm going to give you a tip. Don't do it of the floor or of your bed and the lovely pillows. Step back and take a photo of the entire room.
I just go like chest height. I just go like.
Yeah. We get a kitchen sink.
Yeah.
We just get a kitchen sink and we're like, where are the appliances? Do you have stone bench tops? I can't see. Is there a dishwasher? You know, is it an integrated microwave or a freestanding microwave? Do you have a butler's pantry? Step back. So so we can you can do a video. As much information as you'd like to give us will be very encouraged.
This is more than I got. I even learned a few things from you, because this is obviously your cup of tea, and this is a wonderful 20-30 minute session. I want to wrap up right at the end here by asking you to all the viewers out there as well. Belinda, tell us how we can find you. Where are you best found on social media?
I have an Instagram account as well, and my TikTok is just me doing sort of videos in a very, like I mentioned before, in a basic way. There's no place in TikTok to write me private messages. A lot of people just write comments. There's no filter on TikTok. They just write whatever they want. You know, oh, I have $500,000 to invest. Where should I invest? And I think, dude, you got to pay me for that. I'm not just going to give you, this is general information. But a lot of people would send me a private message in my Instagram. Like I think how we met, we sort of had a bit of a, we commented on each other's posts. And I think that's the beauty of social media. There's so much negativity that can come out of it, but the beauty is, I guess, this networking, this connecting with like-minded people. And I don't get paid for any of my TikToks or my Instagram. I do it for the love of teaching and the love of sharing my knowledge.
Education, very important.
Yeah, I've got 16 years of all this property stuff, and it's all here. And I just think there are no valuers out there on social media, because we have such a wealth of knowledge. We know so much about the property. There's agents and interior designers and builders and architects, and sit through my 2-hour seminar and I'll teach you how to invest in property. And, and then they sign you up to these courses that are thousands of dollars. And I think, I could tell you that for
half the price.
30 minutes. Yeah, not even. I do it for free, but I just think be careful. Yeah, because we have a university degree in property, and I'll leave you with this. A valuer is the only profession that's legally paid to tell you what your property's worth. But you think, oh, but my agent told me what my property's worth. Yeah, but your agent gave you a quote on what they think your property may sell for. And they don't get paid on that quote. They get paid on selling your property, where a valuer will not tell you what your property's worth until they get paid first, because that piece of paper means that if they're wrong, or you lend, or a bank lends on that and the mortgage falls through, we can get sued. We're seen as a professional. And that piece of paper can also get used in a court for divorce proceedings, family law. The Office of State Revenue relies on a valuation. They don't rely on an agent, document. They don't rely on a letter from your accountant. It comes from the valuer.
Not from the broker either. I can't help you there.
No.
Yep.
No, so it's got to come from a valuer. If the roads, I know you guys call it something different in Victoria. We call it the RTA. Come and they take your property because they want to put a highway through it. It's the valuer that tells the government what your property is worth, so they can compensate you. So
Valuers
Yeah,
you are integral to, you're one of the vital cogs in a much bigger engine. So likewise myself.
yeah,
Yeah, between both our industries, we only contribute to a small part, but without either one of us,
correct.
nothing
Yeah.
happens. Yeah.
And even I feel like I'm the Wizard of Oz. I'm not really, but I'm pulling the curtain back and exposing the valuation process for everyone to see.
Do it, and that's why you've
Yeah.
got you've got a fairly large social media presence. Instagram, you've got about 5,500 followers, and
Just shy of, yeah, just shy
not
of.
obviously the number of followers don't mean anything. You want to be, even if you have 100, if you're fully engaged, it's better than 5,000 who are not. But it's your content is very interesting, and I like that. It's, you don't see a valuer on social media. I haven't. You're the first one, so.
Yeah, and I try to make it a bit funny too. You probably see some of my videos and have a little bit of a giggle, because I think you learn through humor, you learn through education, you learn through I'm a very visual learner, so I like to then educate visually. So yeah.
Well, thank you for your time, Belinda. I just want to say I'll leave all the contact links in the comments below. This is Belinda the Valuer on Instagram.
So super original. It's the Valuer on TikTok and the Valuer's House, because I share a lot about my home and my experience building and what I learned as a valuer building. And if you're thinking of building, these are some tips that I think would add value to your home. I mean, it's one thing to get an interior designer to say, oh, choose these colors, but it's the valuer that knows whether it'll add value to your house or not. So
I think you might get
lots and lots of tips.
You might get a few extra followers after I post this video up on social media.
And I always encourage, please send me a private message. I always answer. And I always, I may not give you personal advice, but I always help in a general capacity to, yeah.
Wonderful.
Yeah.
Now, all right. Thank you, everyone. For the purpose of the viewers, I'm just going to hit end record. I don't mind this being on video. But obviously, Belinda, stay on the line after I end the recording. All right. Thank you, everyone. John Ng here from Money Jar Concept, and Belinda Botzolis from Heron Todd White, the Valuer. Reach out to her or reach out to me, and hope to see every one of you on social media. Bye, all.